Starbucks beating earnings and revenue estimates for its second quarter. Humans are supercharging themselves by drinking coffee in the morning. Net sales up more than 14% year over year, and same-store sales increased in China for the first time since 2021. It was considered a very good report. It was the last quarter under Howard Schultz's reign before he handed over the reins of the company, if you will. But you can see right now that shares are down pre-market. That's in large part because investors seem to be focusing on the fact that Starbucks affirmed its fiscal year outlook and didn't raise it. Joining us right now to talk about it, first on Squawk Box is Starbucks' CFO, Rachel Jerry. Rachel, it's great to see you this morning.
Good morning. Good to see you.
I mean, it's fascinating to me because it was a pretty great report all around, and yet investors, I think, are asking this question about, well, if it was so great, why is the next couple quarters not going to be even better?
The way I would look at it is we did have an incredible quarter on every single measure, and that was really evidenced by growth across our portfolio. Importantly, we saw momentum in our reinvention. We're making great strides in terms of our operational excellence and our rigor, and we have more to do. And we had strong recovery in China, which speaks to the resiliency of our partners and the loyalty of our customers there. And that all gave us the confidence to be able to reaffirm our guidance, which we think reflects not only confidence, but the momentum and the opportunity we have ahead.
But is that reaffirmation confidence? Because some people say, well, look at where you are just in this past quarter.
Sure.
You could have upgraded that. Are you being conservative? Yeah. You obviously have a new CEO who's just started in the past month.
Yeah, I would call it confidence when you look at what that guidance is. It's 10 to 12% revenue growth. It's solid margin expansion, and it's earnings growth at the low end of a 15 to 20% range. So I would call that confidence.
All right. What kind of wiggle room do you have for what some people think is going to be a recession come the next 6 months?
Yeah, I think it's, definitely we are in an environment where there are a lot of headwinds, and that impacts our customers. And so we're very cognizant of that, which is why we focus on creating a business that has a resilience. And that comes with, we have a leading digital program. Our SR members in the U.S. grew to 30.8 million, up 15% this quarter. And our rewards members are an indicator of a consistent demand. So that's important. In addition to that, we have very purposeful product innovation, things like refreshers, ice shake and espresso, cold foam. Those are beverages that are hard to make at home, so they give customers a reason to come in our stores. And then our incredible partner experience. I heard you talking about, bots and AI, and we have human connection, and that gives customers a reason to come back into our stores. And importantly, we have an evolving capability around convenience. So all of that gives us a business strength that we feel will give us a resiliency despite the headwinds that are in the environment.
Are you seeing any step down in terms of price on total purchase?
We aren't. I mean, we are always cognizant of the fact that, the inflationary pressures in the environment puts pressures on our customers. And so that's why we really focus on trying to create the very best experience in the products that we offer, in the experience that we offer, in the ways that they can connect. And so today we are not seeing our customers trading down. That was evidenced in the quarter. Our North America business had a 17% growth, to $6.4 billion in revenue. So today we're not seeing that.
A lot of people now look at Starbucks, at least as an investment, as a play on the reopening of China. Mm-hmm. Where do you think they really are? And then I also want to talk about, you think, the risks of doing business in China now, not only from the government of China, but frankly, from the U.S. government and other governments in the West, which may very well put pressure on you.
I think it's important to note that we were incredibly proud of the recovery that we saw in the quarter in China. That was very deliberate. I mean, our partners there, our leaders there have continued to invest in the business all throughout COVID. And they've built an operational muscle that allowed us to be able to meet the demand. We have a market-leading portfolio. We have an evolving omnichannel capability, which allows us to create new revenue and bring in new occasions. And we have a strong connection with our customers. So we see a lot of opportunity. And that was even in the guidance. I mean, we talk about the fact that we will continue to see momentum in our average weekly sales as well as in our comps. So we expect to continue to recover, and we are in a position of strength to be able to lead in this next phase of recovery. And when we think about the long term, we are unwavering in our commitment and our long-term growth opportunity in China.